Good afternoon, good morning, good day, depending on where you're listening from. Welcome to Profit and Beauty. Now, this show was created for salon owners who have decided to start running their salons like a business rather than a hustle. The focus of the show is to help salon owners understand the numbers behind their business so that they can grow and make extraordinary profits. Without this knowledge, it's really hard, if not impossible, for your salon to reach its true potential. My name is Desiree Anderson, and I have 19 years experience as a hairstylist and salon owner. I currently work as a certified public accountant, working mainly with salon owners and hairstylists. My background as a former stylist and salon owner gives me a much better understanding of what our industry professionals need and desire. So if you are a hairstylist or salon owner interested in running your salon like a business, then this show is for you. On the other hand, if you are a hairstylist or salon owner not interested in running your salon like a business, this show may or may not be for you. I just hope you keep listening, and maybe something you hear in one of the episodes will make you decide to turn your craft from a hustle into a business that you can scale and grow. So sit back and enjoy this week's episode. Hi everyone, and thanks for joining me on today's show. Today, I'm going to be doing something a little different. As some of you may or may not know, in addition to being a CPA, I'm also a QuickBooks Online Pro Advisor. So one of the things that Pro Advisors do is we answer questions that QuickBooks users have. This is a free service to all businesses that subscribe to QuickBooks Online or QuickBooks Desktop. On today's show, I'm going to share with you some of the questions that have been asked by salon owners and hairstylists on the QuickBooks Pro Advisor platform. Now, the reason I've decided to do a show like this is because I know that when somebody asks a question, there are probably tons more people that have the exact same question. So today, I'm going to answer 5 questions that stylists and salon owners have asked regarding setting up and recording certain types of transactions inside of QuickBooks Online. Now, I'm going to try to keep my answers as simple as possible to make it easier for you to visualize my response. I will also leave a link to a few instructional how-to videos in my show notes. And one more thing before I get into the questions. You're going to hear me use the word account when referring to transactions within QuickBooks Online. Now, in this context, account simply means the income, expense, asset, or liability accounts that you assign your daily or your monthly transactions to. For example, when you record the rent that you pay for your salon space, you assign it to something called the rent account inside of QuickBooks Online. When you purchase supplies for your business, you assign the expense to the supplies account. Same thing with income. When your client pays you for a service, you assign the income from the service to an income account. Your business can have a few income accounts depending on how many sources of income you have, and you'll likely have a few expense accounts depending on how your business flows. Now, the official name for all of the accounts your business has is called the chart of accounts. Now, the chart of accounts is defined as a listing of all of the accounts available in your accounting system in which to record entries. So now that you have a general idea of what an account is, let's get into some of the questions. The first question is from Gigi in New York. Hello, I own a booth rental salon in New York. How do I input the weekly rent my booth renters give me as non-sales income? They pay their own sales taxes because they rent. Thanks. So it sounds like Gigi owns a booth rental salon and she wants to know how she should record the income that she receives from her hairstylists. Now, most booth rental salons have a minimum of 2 sources of income. One source comes from booth rental income, and the second source comes from the services that the salon owner provides to his or her clients. Now, if your salon sells retail, then you would have 3 sources of income, and your chart of accounts should reflect that, which means you will have 3 income accounts. In addition to having the accounts for the booth renters and an account for the services that you provide your customers, you will also have a retail sales account for the sale of retail. Now, in this case, let's assume Gigi only has 2 sources of income: booth rental income and income from services she provides to her clients. Gigi will first need to create a booth rental account within her chart of accounts. This is where she will record the booth rent that she collects from her renters. But she will need to go one step further. It's always a good idea to have a separate account for each booth renter so that you can see how much you've collected from each individual renter when you run your reports. Also, you want to be able to compare what your booth renter paid you at the end of the year with the amount that she or he reported to the IRS on the 1099 that they provide you and they provide the IRS at the end of each year. Additionally, they may not have kept good records and may have no idea how much they paid you in booth rent that year. So you may have to print a report showing how much they paid you, and you can only do this if you maintain separate accounts for each booth renter. So in order to create a separate account for each booth renter, the booth rental account will have to have sub-accounts for each renter. What I mean by sub-accounts is if you have 3 booth renters, after creating the actual booth rental account, which is going to be the parent account, then you're going to have a sub-account for Susan, you'll have another sub-account for Mary, and then you'll have a sub-account for Tracy. So if you'd like to see how to set up a booth rental account with sub-accounts, you can go to profitandbeauty.com and select episode 9, which is this episode, and go to my show notes and click the link that says setting up booth rental income accounts. On that video, I'm going to show you how to create a booth rental account for your salon and also how to create sub-accounts for each individual booth renter that rents a station at your salon. The second question comes from Nick, spelt with 2 Ks. I am a hairstylist and I'm trying to keep track of all of my income. How do I record tips? So Nick wants to know how to record tips in QuickBooks Online. So tips, just like service income, is taxable. So when recording tips, it should be recorded as part of your income. Now, if you are a salon owner, a booth renter, or a salon suite owner that works alone, you can set up a separate tip account as one of your income accounts, or you can record the entire amount received from your client, including the tip, in your service income account. Now, when I set up books for my clients, I create a separate account for tips because I don't want to distort the actual total income generated from each service. For example, if the service that you provided totaled $150 and your client tips you $20, the total income you received from that client is $170. Now, I think it's a good idea to record the $150 and the $20 in separate accounts because if at some point you want to analyze your reports to see which services you provide are making the most or the least amount of money, the figures won't be distorted. If you include tips as part of your service income, you may come to the wrong conclusion if you're trying to make a decision about total income per service. Now, on the other hand, if you are a commission salon with employees, you have to make sure that you are tracking your employees' tips accurately. Now, the best way to do this is to set up a liability account called Employee Tips, and then create a sub-account under the Employee Tips account for each of your employees. Now, this is where their tips will live until they are paid out to each employee. Once each employee has been paid, you want to make sure that you remove the liability from the balance sheet so you can zero out each person's tip account. Question number 3 comes from Lolita Vasquez. She asks, when accounting for items such as nail polish for a nail salon, would you categorize this as an inventory asset or job supplies? The polish is not available for sale to customers. It is only used when services are being performed. So Lolita wants to know how nail polish should be categorized when recording the purchase in the chart of accounts. Now, she mentioned in her question that the nail polish is only used for services performed and is not available for sale to clients. So this means that the nail polish is part of the salon's supplies and therefore should be recorded in the supplies account. So if, on the other hand, the nail polish was purchased by Lolita specifically to be sold to customers as a retail item, then the polish would be recorded in an inventory account instead of the supply account. So what's the difference between the two accounts, you ask? Well, if the nail polish is purchased only for services performed on the clients, then the money spent to buy the polish is an expense and should be recorded in the supplies account, which is part of the profit and loss statement where all income and expenses are recorded. If the nail polish is purchased to sell to customers, it should be recorded in the inventory account, which is part of the balance sheet where all assets are recorded. Any item that you purchase to resale is considered an asset to your business. Now, an asset is pretty much any item your business owns that can produce income once the item is sold. Question number 4 comes from Jennifer in the United States. If I want to track inventory for a salon, what income category do I put it under? Specifically, retail products like shampoos. Do I just put it in cost of goods sold or just supplies? So Jennifer wants to know how to track retail products that she sells to her clients. As I mentioned in my previous answer about purchasing nail polish to resell to your clients, retail purchases are recorded on the balance sheet. So the answer to Jennifer's question is no. Inventory is not recorded under income, nor should you record it in the supplies or the cost of goods account. Now, without confusing you, I'm going to try to explain the process of recording retail products that you buy to sell to clients. When you first purchase retail products, you record the purchase on your business's balance sheet in an inventory account. The inventory account is where you track all of your unsold retail products. When you finally sell a retail product, you remove the products you sold from the balance sheet and you record the sale on the income and loss statement. The sold product is recorded in 2 separate accounts on the income statement. One account is the cost of goods sold account, and the second account is the retail sales account. So if you purchased a product for $10 and you sold it for $25, $10 is recorded in the cost of goods sold account, and the entire $25 is recorded in the retail sales account. So Jennifer, if you're listening, that's how you track an account for retail items. You purchase the item, the first place it goes is in an inventory account on your balance sheet. Once you sell the item, you remove the item from the balance sheet, you move it to the profit and loss statement, and the sale is recorded in 2 separate accounts, the cost of goods sold account and the retail account. The cost of goods sold account is the amount that the product was purchased for, and the retail sales account is the total amount that you sold the products for. And the final question, question number 5, was asked by a person with the username Adolfo4788 from somewhere in the United States. The person asks, I am trying to figure out how to enter free haircuts. Each time my customers pay for 10 haircuts, they get 1 free. How do I enter the value of the cut as an expense? So it looks like Adolfo gives a complimentary haircut to each client after the client has received 10 consecutive cuts. Now, based on the question, it sounds like he is attempting to record an expense for the free haircuts that he provided to his clients. When you provide a client with a free or discounted service, the discounted amounts or the free service are not recorded as an expense on the profit and loss statement. Now, even though the service was free, it still needs to be recorded as a sale on your income statement. So in order to make sure you're not paying income tax on free services that you provide, you need to make sure you add a discount line to your invoice. So in Adolfo's case, he'll include a discount of 100% on every invoice that represents a free haircut that he gave to a client. So he would create an invoice and then he will pick haircut as the service type. Once he's recorded the service type, he will then click on the discount tab and discount the service by 100%. Now, even though the service was free, you still want to record it in your accounting system because at the end of the period, you do want to be able to look at your reports to see the value of the services that you either gave away or discounted. It's good to have that information for your own records because you may want to use that data in the future for a particular purpose. Now, if you would like to see how to record this type of transaction, go to profitandbeauty.com, episode 9, which is this episode, and click on the link beside how to record discounted services to watch the video. So those were a few questions that people had about recording transactions inside of QuickBooks Online. Now, I like to tell my clients or whoever I'm consulting with that no matter the size of your business, it's very important that you track your income and expenses. Even if you are a booth renter, if you are a salon suite owner and you're the only person working in the suite, or if you are a large salon, it doesn't matter what size you are or how many people that work for you, or whether you work by yourself and for yourself, you should always track your income and your expenses. Because in order for you to actually grow, or in order for you to make changes, you have to know how much money is coming in and how much money is going out. You also need to know the sources of your revenue as well as what you're spending your money on. Because if you need to make changes in the types of services that you offer, because one service is doing very well, another service may not be doing quite as well, you want to be able to make changes or be able to promote the services that may not be doing as well. Also, if you don't know where your money is going, you can't make changes if you are spending money frivolously or on items that do not contribute to the growth of your business. I always say not tracking your income and expenses or not keeping proper records, it's like driving a car blindfolded. Now, you know, if you drive down the street blindfolded, eventually you're going to crash into something. It might take you 1 month, it might take you 1 year, it might take you 2 years or even longer. But eventually, if you can't see where you're going to eventually crash and fall. And that's the same thing when it comes to your business. If you don't understand the numbers, if you don't pay attention to the numbers, if you don't look and see what the numbers are telling you, eventually you are going to either fail in business or your business is never going to grow and it's going to stay exactly at the same place. And you may wonder why your business isn't growing, and you may not realize that that may be the reason. Okay, so that's all I have time for today. If you would like my help creating a chart of accounts for your salon, or if you would like me to do a complimentary review of your current chart of accounts or a review of your QuickBooks file, you can email me at Desiree@andersonaccounting3.com. My first name is spelt Desarie at andersonaccounting3.com. My contact information is also available in the episode 9 show notes. Have a great day, everyone, and I'll talk to you next time.